And we're back on a Saturday morning in the car, like we never left. Welcome to the Confessions of a Not So Dangerous Mind podcast. I'd like to thank you all for spending some of your Saturday morning here with me in New York. But once again, we're going to skip past all that promotional jazz and get right to the guts of the episode. So finally, I completed my 2024 federal and state income tax return. I put it on extension. I went as far out. Oklahoma. I went about as far as I could go, and I submitted, accepted my tax return earlier this week, and as the son of a crackerjack CPA, I feel pretty good. I feel pretty good about it. Now, there are a lot of jokes to be made, and we've all heard them. The things that we get taught in school, we know how to do the Pythagorean theorem, but we can't balance a checkbook. We know what Boyle's law is, but we don't necessarily know how to boil an egg. We've heard all of the jokes. And the reality is now with programs such as TurboTax and the kind of different tiers, you don't really need to learn how to do your own taxes. You can do your own taxes, but you simply get your hand held by, in my case, TurboTax. So even someone like me, who does not have and never did, well, maybe as a younger person, but I don't have a complicated return. So my father, the day that he retired, they had a big, kind of lunch celebration when he retired. The other 80-something or 90-something partners at Citron Cooperman at the end of his career, when I think he finished I think this was in 2010. But my father brought a copy of his 1963 tax return. And it was one page. It was one page. That was it. It was all simple stuff. Here's what he made. Here's what he paid in taxes. Here's a couple of deductions. Here's a few entries for expenses. That was it. It was one page. And then later years of my dad's career, because that particular company, they had all kinds of stuff going on around the world. His return is like 400 pages, 500 pages, and most of it is just boilerplate. It's just filler. But I took a couple of accounting classes. And to be truthful, if I didn't have my dad's help, I would have flunked both of them because the instructors were not that good. They understood the theory, but there's a difference between understanding theory and being able to explain it to people who are not whiz-bangs, as I certainly was not. And my dad, who didn't appear to be the sort of guy he didn't really have a professorly way. He just looked like an accountant. But he was able to impart whatever wisdom he had in terms of making things that he had already understood for 4 or 5 decades, making them achievable for someone like me who, okay, yeah, I'm good with numbers, but it's not just a question of being good with numbers. So when my dad, when his health went downhill in the latter portion of 2021, he couldn't do his 2021 tax return. Now, his return was very simple. Now, I can sit here and tell you that his return was simple, but that doesn't mean anything. Without any, like if I had to do a tax return longhand, I mean, I could do it, but I would do it incorrectly and I would get flagged most likely. But with the programs for the average person like TurboTax, it literally leads you by the hand and takes you through the process. So I guess what I'm saying is, from a perspective of a normal person, you don't need to go to H&R Block to do, if you just have an individual normal return, you'll end up paying more. I just went through the process with TurboTax, and it cost me a total of $202 to file, and I couldn't use the bottom tier with TurboTax. There were a couple of components, and again, it's just a computer explaining, but the computer explained why the bottom tier of the TurboTax program wasn't going to be suitable for me if I wanted to actually do the return right and get the deductions that I qualified for. But having said that, I didn't know what the numbers were going to say, what the tally was going to be, and I didn't know which particular deductions. Like, I didn't have any clue what my federal tax bill was going to be. Now, it wasn't going to be crazy. Like, I knew enough to know it wasn't going to be crazy. But I also, in my head, I imagined it was going to be a certain amount, and I hope it's not more. Again, you start going crazy worrying about these things and saying, well, I wish that I had filed in April. It would now be, 6 months over or whatever. But when I also didn't realize that I had received a form at the end of the year, because I knew that I was going to put it on extension. Because you can think about it this way. I moved into the new house in November of 2023. That was a crazy year. But 2024 was also a crazy year. And there were a lot of things that went very, very wrong in 2024. And it just felt like I was always under the gun and that I was always scrambling to try to catch up. So I did not know that I had received, I guess, a 1099. But I had received information with exactly what I had above board, what I had made in 2024. I didn't know that. So I tallied, this I was able to do with my bank account, every single addition, every single time money came into the bank account. So I actually tallied it up. I tallied up everything, not really longhand with a pencil, but I did it longhand where I was calculating. And when I finished that and I opened the TurboTax program to start to do my 2024 taxes, I think it was Tuesday of this week. It was either Monday or Tuesday. When I got into the right part of the program and, okay, this is what you do. So you use this. We're going to take you to this part of the site, whatever the computer says. Again, there's thousands of permutations that the computer is trained to do depending on if the person enters this, then he has one of these 6 screens that he's going to see next. So I got to the point that said, you probably got an email at the end of the year with your exact amount. And sure enough, when I went back into my saved emails or emails that I had looked at, like old mail, you could say, it was there. And the amount that I had tallied up longhand, I was only off by $10. And I know this is very obvious, but my old man would have been real proud that I was only off by $10, because the number of calculations that I did, and there were a couple of spots where I was, 50 cents, I turned it one way or the other. There was no way that I was going to get it exactly right. But the number of separate entries with 50 cents where I just kind of, okay, this is going to be, I'll push up, this one I'll push down. If it's $100.50, sometimes I call it 101, sometimes I call it 100. Again, just to make it as easy as possible. So I was only off by $10. And that information being the official information, you put that in and then you get a number. If you haven't done this, I strongly urge you, if you can. I did this in less than a half hour, and the fact that I'm good with numbers is irrelevant. This was almost zero stress. And at each stage, I kept getting prompted, hey, we think we can find more deductions. But right up front, the raw number that the machine was giving me, this is your current tax bill is this, and your current state tax bill is that. Now, I was not feeling so good about my life choices, quite frankly. But then it says, if that number looks big, don't panic, because we haven't started with your deductions yet. Words to that effect. So you go into the deductions and the explanations, and do you have this kind of insurance? Do you have that kind of insurance? Do you have these records? Is this stuff that's verifiable? Whatever it is. So as you start clicking buttons, the number starts to drop. And it keeps going down, even with the standard deductions, because of the nature of, what I do. And there are a lot of things which you don't have to, that your adjusted gross income, it goes down. And the lower your adjusted gross income, this is basically accounting 101. The lower your adjusted gross income, the less you're going to pay in taxes, because, the progressive income tax, my dad might argue, the idea of a progressive income tax is un-American, but there's no other way to do it. Otherwise, you have what we already have, unfortunately, which is that, 99.9% of the country's wealth belongs to, 50 families, right? But so the progressive income tax, in theory, it was to try to keep that from happening. Oops, didn't make any difference ultimately. The estate tax, same thing. And estate tax, if you ask me, is it unfair? Of course it's unfair. But what are you going to do, right? So the number just keeps dropping, and I'm like, okay, major sigh of relief. I'm not going to go bankrupt filing my fucking taxes, which I should have done. It doesn't matter. I didn't have to pay any penalties because I did it all. It was all the right way. I wasn't running, on April 14th, I filed for the extension and I got the information saying, you don't, you still owe money. They're very clear about that. You didn't, now it's not that you don't have to pay. You still owe money. And depending on where you owe, it's possible you will incur penalties. But again, we're not talking about somebody who is filing with millions of dollars in taxable income. If the penalties are a percentage of what you owe, and then it's that, okay, that might be a problem. But when you're a regular, ham and egger kind of an individual, the penalties might have been like $20. That's what I'm talking about. Everything in life is levels. So I realized I was not going to have a significant tax bill. And in fact, I was going to get a state refund for the ways I was charged with certain things. I was going to get a state refund. And all told, I ended up, my tax bill was 70 to 80% lower than what I had guesstimated in my head. And you think about how often in life we make assumptions and we say, okay, well, it won't be any worse than this. And then it ends up being worse. In this instance, I was not being an alarmist. In my head, I was running numbers that I thought were legitimate based on my decent understanding of tax law. I mean, I didn't understand it the way my dad did, for whatever year, but I'm glad that I was wrong. I overestimated what I was going to owe. And, it was a sense of accomplishment. When I did my father's tax returns, in 2021 and his last return in 2022, the year in which he passed, I didn't really have to do anything because he was retired and he didn't have any sales because he wasn't really doing anything, but he didn't have any sales of, let's say, stocks. There were no capital gains district, like none of that stuff took place. He got Social Security. I followed the steps, and that was very, very easy. That was even less complicated than what I just did here and what I'm talking about. But I feel like I did this exactly the way that he would have wanted to. The fact that I did an extension to make sure that I had everything together, and just in case it was going to be a more significant tax bill, the extra months between April and October were going to give me more time, because at a certain point, I was no longer scrambling. I was no longer charging and not chasing losses, but just sort of trying desperately to get to a point of almost stasis where, okay, now we can go up. So I needed those 6 months, because the reality is, and I really shouldn't complain, and it's more of an observation than a complaint, the final quarter of 2024 and the first quarter of 2025. I mean, I was busy as hell, but I didn't have any kind of moments of grace. I didn't really experience that until this year got going. And by the time of mid-April, when I made the decision to, put it on extension rather than do a payment plan or whatever it might be, I could see daylight. And I started to say, I just have to keep doing what I'm doing. And then by later in the year, I will not have to stress this. I will have more than enough to take care of my tax bill. And I should be in, decent position going forward. And ideally, this is what we want. This is what we hope for, that we're not just surviving, but and within normal parameters, but we're thriving, that we are one day at a time, we're grinding it out, we're doing the best we can, but we're doing it, we're making it. And I know that if somebody had asked my father at various points of his life and my life, let's say if somebody had asked him in 2005 when he was laid up in a hospital bed after shattering his hip and fracturing his spine, if somebody had said, could you ever imagine your son doing his own tax return? I don't think so. I don't think he has the patience to do that. Well, now you don't really need that much patience. The TurboTax was nowhere near as advanced 20 years ago. Even if you had asked him in 2015 when I was 41, See, well, I mean, maybe if I sat with him, maybe he could get through it. He saw me as somebody who was intelligent, but if I wasn't interested in something, my focus was going to wander. Now that is true, but for something like this, no, I'm not going to let my attention wander. I'm not going to let my mind go into all kinds of different directions. But I do know that wherever the spirit of Alan Philip Cohen is, wherever he is, quote unquote, he would be very, very pleased with the way that I handled the tax situation, that I did the extension in that manner, and that I did not need to do any kind of payment plan. We put it all through, we paid it in one shot, and we're going to get a refund. So I'm going to end up being out some money, but I mean, I could tell you I'm going to be out less than a couple of thousand. I thought I was going to get hit with a lot more from the federal level. And getting those emails saying your return has been approved. Good work. And the thing is, this program is very intuitive. I don't know if there's an AI component. Again, I'm not trying to make any big proclamations here, but anything that gets flagged, like there was something with insurance where I didn't understand what kind of insurance to be, and this is something that'll come up for a lot of people. You can deduct certain kinds of insurance in certain, within certain ranges. And I thought that I was simply being asked about my auto insurance, but that's not what I was being asked. The phrase was business insurance. And so I put down a number, and then I got a message. This was when I thought I was finished. And it says, hey, everything looks great with your return, but we need you to review one thing to make sure that this is what you want to say. And it took me back to the thing with the insurance where I didn't catch that I wasn't supposed to just talk about auto insurance. It would have been, for example, I mean, this is ridiculous. If I had a fleet of vans, that was the kind of insurance that I had written down for. And obviously I don't have a fleet of vans. I thought I was just talking about auto insurance. No. So I took that number completely out. And then when it went through again, then I'm getting now your information looks good. This is all looking terrific. Let's just double check your name and all of the other stuff, your social security. And that was it. It went through, and it's really not much of an accomplishment because I did have my hand held the entire time by the program, but I didn't need to take the return to H&R Block and spend $400 or $500. I just needed to trust the process, right? I just needed to go through it. It's never pleasant. Nobody likes doing it, but the days of an individual struggling to try to figure out which form do I need to file, program does it all, and the program did it all. So don't have to worry about taxes at least until April 15. And if I decide to do another extension next year, it'll be the same thing. But now I'm not going to have the same level of trepidation. I'm going to know, hey, wait a minute, whatever you think the raw number is going to be, it's not going to be that high. You are going to have all of these legal deductions, and the stuff that you can't deduct, like business insurance, which was just an error, no problem. Just go through it. And yes, you're going to hit different tiers. The first 15,000 is zero, whatever. It's not 15,000, but there's a number above which, even if you made 10 million, you don't get taxed on the first, whatever the amount is. And that's something I always found amusing, that if somebody makes, let's say, $25,000, they're getting taxed at a certain rate, the first bunch, and then up to 25. But if you have a year, Roger Goodell getting a bonus of $40 million, he's not paying taxes on the first, $7,000 of that money. I mean, I always thought that was a riot. I know they're not trying to be funny, but that's something that to me is very humorous. But, in that instance, hey, everybody's getting treated the same. And you could say, well, either that's nonsense or no, that makes sense. Everybody should be treated the same, even as ridiculous as it might be that somebody who got a $50 million bonus, they don't pay taxes on the first 12,000, 8,000, whatever the exact tally is. So yes, tax year 2024 for me has come to a close, all good. And I didn't really accomplish anything, but somehow it feels as if I did. And that's good because I've been in a positive frame of mind. I've been feeling upbeat all week. And a big part of it was that I had been stressing over this. Cliche, it was hanging over my head. It really was. And to actually sit down, grit your teeth and hope for the best. I did it, and it's now in the past, and I will never be nervous about this process again. This has been episode 632 of the Confessions of a Not So Dangerous Mind podcast. I'd like to thank you all for spending some of your Saturday morning here with me in New York. And if you check out this episode on the YouTube channel, haven't done so already, please click like, subscribe, comment, share, turn on those notifications. Or if you catch this episode on the audio platforms such as Podbean, Spotify, iTunes, or the others in which we're hosted, same general rule applies. Click like, subscribe, share, and turn on those notifications. I'll be back with a new episode real soon. Till then, peace.